Hi, my name is Damien Connolly, and welcome to today's LinkedIn Live event, which is entitled Sleeping Soundly at Night While Running Your Business, Knowing You've Got Cash in the Bank. So, I'm the founder and managing director of Secure Business Solutions, which is an accountancy practice. We're based in London, but we also have an office in Dublin. And what we do, you might be somewhat familiar with, but actually we are very focused around the use of Xero and QuickBooks accountancy software and really getting the best out of those for our clients in terms of outsourced bookkeeping and offering a full finance team outsourced solution for growing businesses as well. But what I spend more and more of my time on is really working in two areas. One, fractional CFO for growing SMEs, typically over the £1 million or €1 million turnover level. And that's because at that point you start hitting more complex commercial issues, more complexity in your business, but also just with the volume of transactions usually requires a little bit more effort and a bit more planning around how you manage your financial data. There are obviously other issues as well, but that tends to be the threshold where that becomes more of an issue. And additionally, then I work with business owners who are considering a sale or an exit from their business within 2 to 3, sometimes 5 years' time. And it's really about taking them by the hand and taking them through a clear process to get them planned and ready for that process well in advance so that they can sell their business or exit their business for what is hopefully a life-changing sum of money. So really about maximizing the value of their business as much as possible while minimizing the stress of such a transaction that they're going to have to go through anyway. So in terms of today, we're talking about cash and cash flow. And although we had an event on cash a few weeks ago, this is a slightly different event. It's more about clarity. It's about looking forward in your business and about having that confidence in where the business is going and confidence that in 2 or 3 or 6 months' time, you're still able to operate the business without any unexpected problems or cash crunches. So if we go back and talk about cash again, the number one issue keeping business owners from sleeping soundly at night is cash. And it's not whether this new salesperson is going to come on board and be successful. It's not about the new marketing campaign and how successful that will be. It's about cash. It's about whether we can pay salary run at the end of the month, whether there'll be a problem when it comes to pay the VAT at the end of the quarter. It's about having enough to pay the business owner's salary, or maybe to pay a dividend to them because they've got a big life event coming up. So cash is the number one issue keeping people awake at night. And just because you're a bigger business doesn't mean your problems are any different. A bigger business just means you've got larger problems, larger issues to deal with, and larger numbers that you're looking at more often than not. So again, I referred to our last webinar, our last LinkedIn Live event, which is on cash. But that was really focused about highlighting and prioritizing cash within SMEs, particularly growing SMEs, and really making cash the king, because cash is king in any growing business. It's the issue that will cause the biggest problem and be the most likely issue around failure. So really what that was about was improving cash flow, getting to grips with cash and starting to improve it. And we talked about 10 steps across your customers, your suppliers, and various other tools to try and make a difference to improving your cash flow. So obviously when we're talking about managing cash flow and making sure you're sleeping soundly at night, every night, then there's two real sort of non-negotiables really. And one of them is, well, your business does need to be profitable. Because if it's not profitable, you've got a whole different set of issues around funding and trying to keep that funding coming through in your business. But if your business is profitable, then any cash issues you have are really temporary. So it's about how do we manage those temporary issues as best as possible so that they don't impact your well-being, your ability to sleep at night, or the ability of the business to keep trading while those temporary cash issues occur. And the other thing to bear in mind, which maybe isn't spoken about quite as often, is that cash flow, the management of cash flow, it's not a finance thing and it's not an accountant's thing. It's not the accountant in the corner will deal with and solve all those cash flow issues. Cash and cash flow management, it's a business-wide issue. You'll need to involve the sales team at times to get on to their biggest customer and get that cash in a few days earlier. The CEO might need to be involved to enable a discount to be offered for early payment. Some of your ops teams might need to be on the phone to suppliers to negotiate an extra few days of grace on payment terms and not destroy the relationship. So it's a business-wide effort. It's not just an accountant or finance team effort. And obviously the best solution to sleeping soundly at night, to managing your cash flow more generally, is being able to look forward and be able to know with confidence that you have enough cash in the bank in 1 month's time, in 2 months' time, or that you've got enough in the bank that's subject to any changes. You've also got the time and the ability to get the cash you need into the bank. And obviously where you want to be is here. You want to be able to look towards the future in a calm, relaxed, see into the distance as much as possible in a very calm, relaxed way. You don't want to be rushing around trying to solve cash flow issues on the fly. So this is our ideal. This is what we want to see. And if we take on board some of the issues we bring up today and some of the talking points, that's hopefully what most business owners will be facing. Calm and relaxed lifestyle. Okay, so in terms of getting to the point where you can sleep soundly at night and know the cash is in the bank, it means really you're looking forward. It's all about looking forward and being able to plan out with confidence what the future looks like, whether that's a week's time, a month's time, 3 months' time, what that looks like for your business, and being confident that it's covered, or you've got the ability to take some steps or some actions to make sure that the cash is in the bank at the right point in time for you. So what are the issues that typically stop businesses and business owners from looking forward? Well, the first one that comes across more often than you might expect is business owners saying, we have loads of cash, so we don't need to do a cash flow forecast, we don't need to look forward in any way, shape, or form. We've got loads of cash in the bank. And my answer to that is, really? If you've got all this cash available to you, what's the opportunity you're missing out on by not clearly understanding how much you have available to you at any given time? You're possibly missing out on taking some action, maybe a new marketing campaign, maybe an investment in a new area that you would know otherwise that you can afford to make. Or it could be just as simple as, if you know you've got X amount of cash consistently available to you and sitting there doing nothing, why not sweat that cash? Why not sweat that asset, earn some interest, because that might pay for something, whether that's a dividend, whether that's a new member of staff, whether that's a new project or a new marketing campaign. Why would you not want to sweat your assets and actually generate more from that cash, if only you could see it with some confidence? Next issue tends to be, it's too difficult to cash flow forecast or trying to look forward to see where our cash is. It's far too difficult. I can't do it. I've got to get the accountant to do it. He doesn't understand it. The finance team are too busy. Again, my answer to that is that's not really an acceptable answer. If you are struggling or if you have potential concerns about cash flow crunches in the future, then it's key. This is the center of your business, the most important thing in your business to do. And again, as I mentioned earlier, it's not an accountancy thing. This is a business-wide effort. It's a business-wide tool, and it should be the whole business that gets involved in managing your cash and making sure that you can navigate those occasional problems or issues. So the other thing that's stopping businesses looking forward and taking these steps is you don't have the basics in place. If you don't have your finance basics in place, you cannot look forward at all, or certainly with any certainty. So what that means is your bookkeeping needs to be up to date. You can't have 200 transactions sitting outstanding, unreconciled in your bank account in zero on QuickBooks. You can't have a pile of invoices sitting on your desk not processed through from your suppliers. And it also means that your sales invoices must be issued. You must have them out to your customers because without your finance basics in place, you can't see, first of all, where you are now, and you can't then extrapolate forward and look at when some of those invoices might be paid, when you're going to pay some of your suppliers, etc., etc., etc. So again, you need to know your finance basics are in place so that you can start to look forward. The other thing is not having a plan in your business to try and maximize or manage your cash. Remember, cash is king. It should be the center of your universe, the center of everything you do. So if you don't have that plan to maximize things, then you're not going to be able to start looking forward. And what that means is, there should be some, even if it's not optimal, there should be some credit control process. When do you chase your customers to get payments? How regular, how irregular is that, or how regular could it be? Do you have payment terms? Can you put them in place? Do you know what they are? Do you have any at all? When do you pay your suppliers? Do you just pay them every time they ring you and ask you? Or do you have a plan to pay them at the end of the week, or at the end of the month, or twice a month? So again, these are all internal processes that you need to have in place, because if you don't have any, then you can't look forward and try and decide when people will pay you, when you're going to pay your suppliers, etc. And the last one is maybe a little bit unusual. It's communication. If there's no communication within the business, then you can't look forward, because no one person, more often than not, has all the answers and knows what's happening with your cash in the business throughout the business. So the finance team may have a certain amount of information, but they won't necessarily know that the business owners want to take a dividend in 6 weeks' time. Maybe they're not aware that the sales team are about to launch a new marketing campaign. So the business owners and some of the marketing team might be familiar with this, but no one else might be aware of it. So again, it's really, really important that if you're going to start looking forward to your business, there needs to be the right level of communication, that people know what's happening, not just today, but what's happening next month, the following month, so that then you can put those into your plans and see where the business is. So again, I'll go back to a question I asked in the previous webinar, or the previous event I had, which is, if you don't have the answers to these questions, then you're going to be stuck, because if you don't know what's happening in your business right now and you don't have that clarity, you're going to really struggle to turn things around and start looking forward. So questions, do you know if your bank figure in your account system, Xero, QuickBooks, does it match your bank statement, or is it very different for one reason or another? Do you know how much cash you have in your bank account today? Or broadly speaking, do you know how much cash you have in the bank? Do you know when your payroll is coming out or your VAT is coming out? Because it's important to know that these are going to come up and they are going to come out of your business at some point in the future. Do you broadly know when this is going to happen? And do you, as the business owner, do you know when you want to get paid? And do you know if you're going to need some additional cash, maybe a dividend, for something coming up? So these are really, really important questions, and they need to be questions that are on your mind in order for you then to start thinking about the value of looking forward and being clear about what cash is in your bank account. So how do we start looking forward? What do we do? Well, the simple answer, or the simplest answer I can come up with, is this. The only way to do it, or the only way in my experience to really get on top of your cash, to have that certainty and to have that clarity about what cash is in the bank, is you need to have a 13-week cash flow forecast in place. Maybe it sounds quite technical, but actually it's a relatively simple document or report. It covers a 3-month period, invariably a couple of weeks, seeing where the cash is coming out of the business, and then looking forward over the next 6 or 8 weeks to see what's happening, what cash is coming in, and where there might be a problem or a potential cash crunch. So how does it work? 13-week cash flow forecast. It's not as difficult or as technical as it might sound, but how does it work? Again, we come back to some of those questions that you get back from clients. Is it very technical? Is it something that's really very accountant-ish? Do I need to get my finance team to do it? Yes, it's probably led by the finance team, but again, You need to understand it as the business owner. You need to be involved in putting it together and certainly involved in reviewing it. That's really, really important. But again, the template that I'll talk you through shortly that I use is relatively simple. It's relatively straightforward. And the thing to bear in mind about a 13-week cash flow forecast is it's a cash flow forecast. All it is cash coming in and cash coming out. Sometimes when I go into businesses or I look at cash flow forecasts that are put in front of me, they seem to be some kind of mix or amalgam of a profit and loss, a cash flow forecast, a something else with a bit of a balance sheet in it. Profit and loss is all about your revenues, your costs, and your profitability. Your balance sheet is all about your assets and your liabilities and the reserves, the profits remaining in your business. The cash flow forecast is just purely about cash. Cash in, cash out. Simple. Don't make it any more complex than it needs to be. And again, to recap, cash flow forecast, how does it work? Well, it won't work if your finance basics aren't in place. If you're trying to bring your bookkeeping up to date, you're trying to extrapolate figures in because there's holes in what you've done for your bookkeeping to date, it's not going to work. It's not going to do the job it's meant to do. Even if you get some snazzy software, we'll talk about software a little bit later, even if you get some snazzy software, it's still not going to work because the software will connect to your Xero, your QuickBooks account. If your bookkeeping's out of date, it's not going to work. And if you don't understand how the software is put together, again, it's not going to work and deliver any numbers. It will deliver pictures, lots of figures, but it won't deliver the answers and the clarity that you need. And then the other thing about a cash flow forecast is it's flexible. The whole purpose of it is that it gives you visibility of what's happening in the future, but it also gives you the opportunity to take account of any changes or anything that you thought is going to happen and isn't going to happen, and gives you that window to then change things within your forecast, take actions so that then any changes can be counterbalanced by some changes that you've actively made to make sure that you've always got cash in the bank to pay what needs to be paid. So again, I kind of talked about non-negotiables. I just want to run through it again very, very briefly. What are the non-negotiables? 13-week cash flow forecast, it's about decision making. That's all it's there for to do. It's for you to see what's coming up over the coming week, 4 weeks, 8 weeks, 12 weeks, and then to be able to see with confidence that everything is covered with plenty of headroom, or there's a potential problem that you need to keep a close eye on, or there's a bigger problem that you need to then take action to make sure you can get cash in to cover that outlay. Again, don't confuse things. It's a cash flow forecast. It's not anything else. It doesn't need to cover anything in your balance sheet. It doesn't need to do anything with your P&L. Keep it simple. 13 weeks is one that I've used through my experience because it works. It's a 3-month window. 3-month window is really realistically all you can do. If you start looking any further than 3 months, there's too many uncertainties, there's too many variables, too many changes can happen. 3 months is a bit more standard. Things tend to come in broadly as you expect. So it's a nice window to use. Internal processes. You can have the best looking software, you can have the snazziest looking 13-week cash flow forecast, but underpinning all that is still going to be some routine, some processes. Who updates it? How often is it reviewed? Who updates when things happen? If something changes in the 13-week cash flow, who's going to drive some action? Who's going to take some action? There's always going to be some internal processes around it. So make sure you're aware of that and make sure you embed those in as well. Review it weekly, monthly, whatever suits you, but I'd suggest probably weekly, certainly monthly. And use a template. Use my template if you'd like to use my template, but use a standard template that can be updated and reviewed simply and easily, or use some software if you've got a bit of a process that works and you know this will automate and simplify it, and you know how the software works and how it needs to be updated. So let's get to the cash flow forecast. So I've already said that I try and keep it simple. So this is an Excel sheet. It looks quite simple and straightforward. I've developed it over a number of years. I've used it with a number of clients from time to time. It beats everything that I've seen, and it's a great starter for 10. Yes, if you've got a very complex business, yes, if you've got somebody who's got the time and ability to devote to looking at your cash flow on a daily basis, then, use some software. I'm sure there's something far more complex than this that you can use. But for most businesses, anywhere from 500,000 to a couple of £1 million turnover, this has proved time and again to be the simplest, easiest way to just get those processes operating in the business, to give business owners some clarity and some confidence about what cash they have and when they need to be a bit more careful and when they need to take some action. And that's basically it. So again, simple, simple, simple. It's just 13 weeks. You name your weeks. You have a starting cash position, which should match your bank account at the end of that week. You then have all of your cash due to come in, all of your cash outflows across your regular, your ad hoc, and various other, and then it gets you to a point where you can see your cash outflow and then your balance after that outflow or inflow. And so then you can see at the end of that week, do I look like I've got the cash in the bank to pay for everything that needs to be paid for and to start the following week? Simple as that. So a little bit more detail. So I've just dived in to a little bit closer to have a look at the 13-week cash flow. This is the top half of the cash flow itself. Again, you can see quite clearly along the top, the weeks are put in. Typically, I run it on a Friday because a lot of payment runs, a lot of cash, a lot of chasing of customers happens towards the end of the week. So I tend to say run your weekly cash flow forecasting Monday to Friday. So you end your week on a Friday, and then this is the top part of your cash flow forecast. You just put in the cash that you know is coming in from the invoices that are in your system already, that you've already issued, and you should have some idea, either through your standard payment terms or through understanding your customers, when that cash will come in. What week will that come in? Will it come in on a Monday? Will it come in on a Friday? Will it come in during the week? And you just plug your numbers in the correct week. Then there might be an element of, as you move a little bit further out, the invoice hasn't been issued or in your system yet, but you know by the end of next month, you're going to issue another invoice for £10,000 to this customer, 20,000 to that customer, which will be paid then at the end of the following month. So you can plug those figures in. So once you've done all that, that should give you a reasonably good picture over that 13-week period as to what cash has come in over the last few weeks. You can see what the trends look like. And then you've got your forecast or your outlook weeks with the amounts that are due to come in, all plugged in with the best of your ability at the moment. If we then look at the bottom part of the cash flow forecast report, you can then see that we just put in our simple recurring costs, which tend to be things like rent, credit cards in some cases, some regular other payments for your business. We put those in a group just to make it easy to complete it. And again, if they're recurring, we know what dates they're going to leave the business, so you can plug them in over the next two to 3 months. And usually they're fairly standard figures. Then typically I put in the recurring variable, so maybe the numbers change each week or each month, but they're recurring costs that come out. So that could be your payroll, it could be your PAYE and your national insurance, maybe your pension payments. And then underneath that, we put in the slightly more irregular. So it might be your payment runs. If you pay your suppliers once every month or twice every month, then we put in those in a little group separately as well. So again, put in your figures. This is the actual cash that's going to be paid out, and just plug it in across your weeks. And that then gives you your income over those weeks, your cash spend over those weeks. And then that starts then give you a picture as to whether there's a net cash inflow or a net cash outflow for that particular week. And obviously then it gives you your net cash position, or what should be your bank balance on that Friday. Now, that's just the starting point, because then you've got your outlook for what the cash looks like. It may throw up if I go back a second. So if we get to this period down here, and there's a big outflow, and you can see then that your figures go red in any one of these weeks, then this is your early warning system to tell you that on this week, you're going to be struggling for cash. So either you need to then start having conversations with your suppliers, or you need to get onto your sales team to start having discussions with your customers to see, can they pay a little bit earlier, maybe offer them a discount. Or if it's red for a period of time, then you need to be questioning yourself today, what is the problem? Are we struggling with our sales? Have we kicked off a new campaign? Have we recruited in somebody into the business ahead of some new activity, but we know that that's probably going to end up having to be funded? Well, now this will show you very quickly and easily when that needs to be funded for. And so you can start having conversations about getting an overdraft in place, maybe getting some third-party loan funding, because you can now see quite clearly when you're going to be struggling, when you're going to have your cash crunch, and therefore when you need to have your loan or your overdraft in place. Or if it's not quite so significant, then it means you need to be speaking to your sales team to say, guys, we need to get some of those sales out of our pipeline across the line by this week because we're going to struggle with cash. Otherwise, yes, we can take some steps to try and manage that, but you need to up your sales, and we know there's a pipeline, you need to work your pipeline, please. So it could be any number of variables, but at least the fact you've now started plugging those figures in there starts to give you the ability to see when there might be a problem, whether there's some simple actions or steps you can take, or whether there's a more ingrained issue or problem that needs to be addressed using some of the other tools, funding, investment, etc., etc., etc. So again, I try and keep it really simple. We've got a front page which has all the weeks and all the figures reflected in it. But what I have on my template is I have a supporting page where we plug in all the working numbers on a separate page, which means you don't have potential problems of someone updating something on the front page that puts your cash flow forecast completely out of whack. So the front page, the one we've just shown you now, doesn't have anything updated on it directly. Everything is on a separate page behind it, which matches up to the weeks, matches up to the cash inflow items, cash outflow items. But it just means then that you're plugging numbers in here, you can play around with the figures and then go back and review your cash flow forecast on your front page. And again, there's the ability to add some notes. And if not on this page, there's a separate page they can add in some notes that allows you 3 or 4 weeks time to say, what was that figure we put in, in the middle of October? Yes, I can now understand what it was. We're now not going to have that spend. We decided to not bring in that recruit, or it's going to be delayed for another 6 weeks. And you can continuously make some changes to that understanding what's in your original cash flow forecast. And then there's a software option. So this is an excerpt from Float, which is quite a nice cash flow forecast software. It links quite nicely, certainly with Xero, I think with QuickBooks as well. But what it does, it takes all the information out of Xero. So all your bookkeeping gets sucked into the software, and then it allows you then to add in additional adjustments to your cash flow so that in 3 weeks' time you can adjust for this. You can plug in a cost that's not in Xero yet, and then you can make some scenario planning. So if this person doesn't pay by this time, what will happen? And it then updates based on the criteria and the definitions and the changes and scenarios that you put in there as well. But again, my experience tells me that you can't start using this slightly advanced software until you understand how your 13-week cash flow works, what the steps are that need to go into it to make it work. And only then can you start to automate and use the software for it. So that's pretty much it for today. It's really just about giving you a vision of what's possible and also give you an indication of the tools that you can use to start looking forward. And if you use those tools, if you use that 13-week cash flow or use the software, what it means is as of today's date, you can see whether you'll have enough cash in the bank for the next 10, 12, 13 weeks. And it also means that if there's a problem, you get visibility of it now, and then you can take some steps and some actions to address it, or as I said, if it's more longer term problem, then you can take the steps today to get the bank funding or to get in contact with your bank for the overdraft if that's what's needed. So hopefully that was helpful. Hopefully that gives you a few thoughts and a few ideas. But again, seems quite simple, but actually it's underpinned by the non-negotiables, and also there are lots of conversations around cash flow and how to manage cash flow, how to look forward. In my experience, this simple approach is the best way for most businesses to use it. And examples that I mentioned earlier on, where sometimes businesses think they don't have enough cash or they're slightly worried, not sleeping as soundly as they should do. And it's only by going through this process I've been able to show them that they have more cash than they need on an ongoing basis, and then they've been able to put that cash in deposit and earn £2,000, £3,000, £4,000 a month in interest, which then allows them to take some additional money out or to fund something else. Or where businesses have been struggling a little bit with cash flow, where they're profitable, allows them then to manage the cash crunches or to manage the first half of the year, which might be quiet. And then they know they've got a much better seasonal part of the year in the second half. It allows you to manage it with a bit of confidence, and also then be able to, if you're speaking to your bank, to be able to show them quite clearly what's happening based on what criteria, and then how they will see an improvement. And then if that happens, then you're not just engendering confidence for your own business, but for those people who may need to then fund you again at the same time next year, it allows them to have some confidence in how you're managing your business as well. So again, to go back to what we talked about a little bit earlier, if we can start looking forward, if we can have some clarity, know that we've got the cash in the bank, then it means we're back to being able to sleep all night. We can relax. We don't need to stay awake worrying about these things. And our business is calm. We can focus on the things that we need to do and not have those sleepless nights. So if you have any questions or any comments, then feel free to put them in the comments below. I'm not sure I can see them right now, but what I'll do is I'll make sure that I address them. I'll come back to you either through a DM after today's call, or I'll address them in the comments below the live event. Otherwise, as I mentioned earlier, this is a big chunk of what I do as part of my fractional CFO work. So again, if there's anything else that's not cash related, by all means, I'm happy to have a conversation and see if there's something that we can do to help you through some of those challenges. Otherwise, feel free to contact me, if not directly through LinkedIn. Me, if you want to contact me. Then I am in LinkedIn under Damien Connolly FCCA. So if we're not already connected, feel free to connect. We have a YouTube channel which has some videos, some webinars, some FAQs, and some explainer videos on various topics around cash flow and around other topical issues or other issues that are on my mind, maybe not always on yours. So if you go to find us at Sakura Business on YouTube, you'll find that, and I hope that's helpful. And also then if you want to DM me guide, then there is quite a detailed guide on fractional CFO and the signs of when you might need one. I'm happy to send that out to you. And equally, this 13-week cash flow template, again, it's something I've worked on. It's simple, but it does the job really well. If you want to message me template, then I'm happy to send you my 13-week cash flow template to get you started. I'm very happy to do that. If you do want to book a call, then either drop me a line or put a comment in the comment below, and I'm happy then to arrange a call separately with you. So that's it for today's event, I think. Feel free to put the questions, feel free to DM me separately. I'll answer as much as I can. And again, if you do want the guide, message me guide, or if you prefer the template, very happy to share my template. And so put template in, and I'll happily send that out to you as well. Okay, that's it for today. Thank you very much for your attendance, and We will be having another LinkedIn Live event towards the end of the month. So if you're not already signed up for that, please do so. And hopefully it'll be another interesting topic. Thank you very much.